Now, Zoom boomed over COVID lockdown, but they fell a whopping 17% yesterday, despite posting, not too bad earnings. Is this the end for them? Have they, run their course through the COVID pandemic? In today's chart of the day, I take a look at the technical analysis to unravel the picture. Hello, I'm Stephen Ho, trader and founder of the Stock Hunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. So straight into the weekly line chart for that longer term view, and we can see back in April of 2019 when Zoom went public, they had a quiet sort of year, and then the pandemic kicks in and the price just skyrockets up to the 550, 560 area. But since that pandemic has calmed down a little and vaccines are more available and things are more in control, the price has steadily declined, and yesterday it fell 17%, sort of into an area of longer term sort of support resistance area, in that just under the 300, the 290 mark, which we can see happened, last lows around May of 21, and we had that peak if we go back even further into 2020, sort of August time, at the same sort of level before just pulling back and then rocketing off again. So actually it seems to be quite an important price area we're at the moment. But interestingly, I drew on this triangle pattern here, a wedge type look, and actually if in the pure rules of technical analysis, if we were taking them, that's more of a bullish type triangle, and if the price can get back up past 368, 370 in that Fibonacci line there, 61.8, break outside of that triangle pattern, then that's quite a bullish upside potential for it, to maybe push towards the highs. So really we're at a critical juncture at the moment around this price level. If it breaks here, then the mid 200s, and then if not lower down to 200, late 180s, 190s in terms of price. So let's look at the Heikin Ashi for a bit more detail. The Heikin Ashi daily chart really is only continuing the story, that slow decline, the 2 standard deviation regression trend there, and a slowish downtrend. In terms of signals at the bottom, both bearish. We can see the volatility spike, that middle red line there with the black moving average. It went from its usual 20s, 30s up to 100 yesterday, so that's good for the options traders, or bad depending which way you were. And in terms of volume, we can see that spike yesterday which drove the price down. Now if we zoom in on the chart, we can start to see the big down bar yesterday, and it's not quite given us another sell signal out of the box setup. We're already on a sell signal going back to sort of the earlier part of August, so it's a nice trade for someone if they were following those signals there. And if we zoom back out and draw that chart in, if we were following that regression trend, then we could be taking the price down to let's say the 240, 235 area, which would then sort of marry into that sort of price area of sort of consolidation around June to October of 2020 before it drove up heavily to those highs. So there's a bit more downside there to run in terms of the regression channel, and where it might find natural support before thinking where it's going to go next. Finally, into the Renko chart, I've got a $6 block size, and in terms of signals at the bottom, both bearish, and I've drawn two Fibonacci setups as standard. I've drawn a longer term one that took us back to the sort of just pre COVID breakout, and then I've taken a trend Fibonacci setup over the recent down movement in price. And if we look at that now, focusing on those Fibonacci's, actually we are hitting the May-June lows at the moment, so nothing unusual with that price sell-off yesterday, other than it was a big number. But it's hitting resistance at the moment. Could this build support from here to bounce upwards? We had a nice double top pattern on the Renko chart there, which could signify a further breakdown lower. And if it does go lower, where could it end up? Well, in the really short term, 250, mid, that sort of number. Next down, early 200s, and then we can go further down, 118, then back to those really, more serious lows around the $60, $70 mark. If it can, consolidate here and stop the rot, then next upside really is those highs just under 400, where that double top formation on the Renko chart there started, and then after that mid 400s, and then $500, and then trying to get back to those highs at the 560, 570 area. But at the moment it's difficult to see what will drive it up there, and it does have the feeling of bearish continuation at the moment. So really key to watch what happens next with the price around, like I say, this $290 area. So in summary, I'm going to have to give it a bearish overall opinion, just because all the indicators, everything at the moment is saying sell. Now the caveat there is, can it build at this price point for a reversal and ping back up? Well, we will see, but generally it's hard to bet against a bearish situation at the moment. So if you are of a bullish opinion, it's sit and wait for those signals to change before joining in the action. And if we focus in on the targets, there is some good upside to be had, and actually it's probably better risk return than the downside. But again, it needs a bit of patience and waiting before joining in there. So then the downside, we got 1.66 and 2.44 to 1 in the sort of medium sort of term, and the upside 2.33 and 5.66 to 1. But like I say, at the moment, if you're going purely on the technicals, it's a bearish opinion at the moment. So it's not looking too good for Zoom at the moment. Whether it's the end of their great bull run, who knows? Technicals saying probably some more pain to come. So let me know in the comments below where you think the price is going to go next. What could change the scenario or situation for Zoom at the moment? Are they on the ropes? Like I say, let me know in those comments below. And if you've liked the technical analysis in today's chart of the day, I'll put a link in the description below that you can follow if you want to learn more. And if you've liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of any content I'm going to produce just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.